Here with his top 5 picks is Kevin Mahn, President and Chief Investment Officer at Hennian & Walsh Asset Management. Kevin, I want to dig into these picks of yours that you've given us. First up, Micron, up, 40% year to date?
Not too bad.
What makes Micron still a buy at these levels?
Yeah, to me, the AI revolution overall comes to a screeching halt without power and memory. And when I think of memory, the first name I think of is Micron, the leading provider of memory to all the chip fabricators in the world. We just learned from them last week, just in terms of the demand for memory, it's insatiable. They significantly beat earnings estimates, significantly beat revenue estimates, and guided higher. We also know that their largest client, that being NVIDIA, we've heard of NVIDIA, right? They are actually demanding even more memory for the development of their more advanced AI chip, Rubin, which is coming out this year, and then their enhanced version of Rubin the following year. So I see more upside for Micron here, believe it or not, just because the demand for memory isn't going away. Do we consider valuation? Of course we do. But that doesn't mean they can't and won't move higher.
And actually up 40% is off the highs.
Right.
It did get punished after those earnings. NVIDIA
Shocker.
is not one of your top 5. If you could only buy one, would it be NVIDIA or Micron?
NVIDIA.
Okay.
Absolutely.
Next up is Eaton Corp, ETN. It's a power and data center play.
Yes.
What makes that a buy? Make the case for Eaton.
Sure. So my overall theme for the year, as you know, is follow the money. Follow the money in terms of where all the money is being spent in the AI revolution right now. It's infrastructure. Infrastructure company, Eaton Corporation. We've seen Eaton involved in the construction of commercial office space, warehouses, distribution centers, and now data centers. We also know we saw them in the headlines just about 2 weeks ago for their own debt sales to help finance the acquisition of liquid solutions provider, Boyd Thermal. So they're leaning more and more into the data center space right now because they see the opportunity. They're trading at a very attractive valuation. They have a dividend above 1%. I think it's a nice backdoor play into the AI revolution from a very well-established company with a strong balance sheet.
Who would be a competitor of Eaton?
If you want to look at a company like AECOM is another company that's out there building. EMCOR is another data center construction company. But now we've seen Eaton lean into cooling as well, which is very intriguing to me as a portfolio manager.
Okay, let's stick with your data center theme.
Sure.
Pick number 3, although in no particular order,
Yes.
from my understanding, is
That's
Vertiv,
correct.
up more than 50% year to date. What gives you confidence that Vertiv still has upside from here? Because it's a winner.
Yeah, I mean, we found Vertiv, they got on our radar last year when we were looking for picks and shovels plays within the overall AI ecosystem. They've been in the business for a long time. They were providing HVAC solutions to big office building and commercial parks. But now they've also become a backdoor play into the AI revolution because they're providing cooling solutions to data centers because we know they run hot. They consume a tremendous amount of power and they run very hot. So they need cooling solutions. Vertiv is just that very possibility. And they also were in the news recently as they announced a collaboration with Generate Capital to provide, get this, Caroline, power and cooling solutions in a box, if you will. Bring your own power and solutions that they're going to sell to data centers. I think it's very innovative and allows for more growth potential for Vertiv.
Next up, Taiwan Semi. We have AI demand on one side, which certainly would help a TSMC, but we also have geopolitical risk. Why does the opportunity outweigh the risk here?
Sure, we'll start with the geopolitical risk. I think they've started to address that already prior to everything taking place in 2026 by building a very large production plant in Phoenix, Arizona to onshore their own chip fabrication and making capabilities onto US shores at the request and with investment from NVIDIA, who is their largest client as well. We know that they're the largest dedicated chip foundry in the world with about a 60% market share. They pay a dividend as well, and their growth side is unlimited from here because companies need them to make their chips. A lot of people think that NVIDIA is the biggest chip maker in the world. They sell the most chips, but they don't make the most chips. Taiwan Semiconductor does.
All right, so that's the bull case for Taiwan Semi is more upside from here. I was taking a look. I mean, it's only up. I say only, but only up about 10%
Only.
year to date. So more room
Considering
to
where
run.
the markets are right now, I think most investors would take up 10%, maybe even
Sure.
take up 1%.
We've just gotten used to such lofty returns, but not overstretched, if
Correct,
you will.
correct.
In terms of your final pick, not an AI infrastructure play, that's L3Harris. What role does L3Harris play in a portfolio?
Aerospace and defense. Follow the money. We know that even NATO countries have committed to spend up to 5% of their respective GDP on their own defense by the end of 2035. We know that President Trump is looking to spend up to $1.5 trillion to upgrade, modernize, and replenish our own military capabilities next year. Plus, the conflict in Iran has diminished our own missile and missile interference capabilities. Enter L3 Harris, which supplies missile and missile interceptors. And if we're serious about building this Iron Dome capability similar to what Israel has here in the US, I would anticipate L3 Harris to be a benefactor of that spending as well. Pay a dividend of about 1.3% and are trading at less than 30 times forward-looking earnings. Not cheap, but not overly expensive either.
No bargains, though. None of these names
no
are
bargains.
negative
No
year
bargains.
to date. But just to confirm, you would be comfortable putting new money to work at current levels?
Yes, confirmed.
Which one worries you of the top 5 most on valuation?
I would have to say Vertiv right now. They're trading very rich from a current PE and a forward PE perspective. I see more demand for Vertiv, but they also have a lot of competition now from the likes of Modine Manufacturing, Comfort Systems. We learned what Eaton was doing to try and acquire another cooling solution provider. So of those names that I listed earlier, that's the one that would have the biggest potential question mark, although I'm still bullish on it.
And if we continue to see money rotate out of AI, which we have been seeing, you're a pretty tech-heavy top pick here.
Yeah.
Top picks. Which of these names holds up best if that rotation continues?
Eaton existed and was profitable before the AI revolution even started. They have a core business that's in place in terms of infrastructure and connectivity that doesn't go away regardless of the AI revolution, but I don't think the AI revolution is going away, and they'll continue to benefit from that as well.
Which one poses the biggest risk?
Micron, you would have to argue just in terms of the memory capabilities, but they can't even keep up with their existing order flow right now to meet all the insatiable demand for memory. So while that could be the biggest risk, they're also the biggest current benefactor.
And if you could only buy one of the 5, which would it be?
L3 Harris.
We'll leave it there. Kevin, thanks so much for those top
Thank you,
picks.
Karen. My pleasure.
That's Kevin Mahn, Chief Investment Officer at Hennian & Walsh Asset Management.